Three, two, one. Good morning, traders. Happy Wednesday. We are finally back here to the pre-market prep. Fiance's got the car, so she's good to go. But how are we doing this morning? Let's do a quick audio check. Make sure you can hear me good. Make sure you can see the charts here. And then we're going to get jumping in because we got a good amount here to discuss before the market opens up in just about 45 minutes. Let's get ourselves some weekly charts. All right, so we'll start off here with the weekly charts because the way I'm kind of looking at this market is it's weekly chart versus daily chart, where if you look at the selling pressure over the last 3 weeks here, in terms of a weekly trend, it's just a pullback to the 21 EMA. Now, this trend has been so strong, we haven't actually tested the 21 like we are here since October of last year. So to me, that just kind of speaks volumes, so to say, to the strength of the trend. And I do think it paints a slightly different picture than a daily chart or a 4-hour chart. The trend is still very much intact here. So into the end of the week, that is a big level of support to hold. And it's not so much, my thought process isn't so much, okay, we dip to the weekly 21. I'm going to blindly get long everything under the sun and back to the highs we go. We need a little bit more confirmation. Do keep in mind, it's not so much that we're just going to rip off the 21 back to the highs. We could spend the month of October chopping here. Just at the end of the day, that is a key level of support. And if we do hold, then your uptrend is still very much intact here. And I think a good chart to study from this perspective is actually the weekly chart of the Qs. Were those 2 to 3 to 4 weeks of selling pressure as we pull back to the 21 EMA on a daily time frame, a 1 hour, a 2 hour, those moments in time are going to look pretty ugly on a lower time frame. But the perspective that the weekly chart gives you is that all that really is the pullback to the 21 EMA. So looking at the Qs here, it all makes a little bit of sense. We built up a lot of energy back here to 21. We got the killer push, and you hit 3 plus ATR, plus 3 ATR. It's kind of that moment in time where it would make sense if you pull back to the 21. So I do think you want to be patient here. And you got the Fed coming out today. And another component is, does volatility throw in the towel? So the market, we've had viable dips for the last year and change. Most recently, you had May, June, July, August. You had these little flushes in the market, and each of them made a really good buying opportunity. The kicker, though, is that you hold off on buying that dip in the face of rising volatility. So what I would like to see here, ideally out of the VIX, is we're heading back towards a 21 EMA. Then if we're holding the weekly 21, then I'm looking to get long at that point. So those are a few of the things that I'm looking to kind of see come together here before I start getting a bunch of cash out there. But I do think the weekly chart is going to give you a bit of a healthier perspective of the trend. Because if you look at a daily chart of the S&P 500, it's ugly stuff. No stacked DMAs. There's a daily squeeze firing short. If you look at a daily chart of an Apple, that's really ugly. That's nasty, nasty stuff here. If you look at a weekly chart of Apple, though, it's incredibly bullish. You have stacked DMAs, you have green 10x bars, and it all makes a little bit of sense. You build up energy at the 21. There's your multi-month push into 3 ATR. You're kind of due for a dip here. And the 21 EMA is typically where you're going to get that dip. So that daily chart, that doesn't get me too excited here to try to get long Apple for a trade that expires in 3 to 5 days. Into October expiration, into earnings, if this holds structure here, that's a buyable dip on your weekly chart. And I do give a lot of respect to the weekly trend. So I think that's where my focus is going to be. Not so much can I buy this dip for a trade for the next week or so, because it's a little bit iffy here. Daily squeezes are firing short, but with a bit more patience, if you do in fact see the Qs, see the S&P 500, see the Apples, the Facebooks hold their weekly 21, I do think potentially all we're living through here is just a healthy retracement inside of a lot of really bullish trends. So Facebook's another good example of this. Look at that daily chart, and that's a bit sketch. Daily squeeze fire is short, no stacked DMAs. So, that's not that moment in time here on Facebook where that daily chart is going to pull me into a long position. But taking a look at the weekly trend, This is just about as bullish as it gets. Stacked EMAs, green 10x bars, and you're dipping back to the 21. So into October, really into earnings for a lot of the tech names here. With a hold of that weekly 21, I think there could be some swing opportunities there. Where I think you could get into trouble is trying to time the exact bottom this week on Facebook. Don't fight those daily squeezes. So that is kind of what I'm taking a look at here heading into today's session. And we do have the Fed. So there's a potential things are a bit funky today. Now, just real quick here, because that basically is my primary focus right now. Viewing this as potentially just a healthy dip into weekly support, then looking to pick my spots wisely. But to quickly talk about the short side of things, because I know that's a big question right now, pick your spots wisely on the shorts as well. And I think you want to follow some of the same rules that we follow when we're trying to go long the market. Build a position at the 21, take profits at 2 to 3 ATR. That's kind of the recipe to the upside. When you're looking to short here, you want a similar mindset where you don't so much want to try to short down here at -2, -3 ATR. You're quote unquote getting short in the hole where there's a growing probability you're going to get a bit of a bounce. So if you are in fact looking to short this market, I think you have to do that on a bounce. And yesterday was a good example. I'm not trying to flush down here, not trying to short down there rather, but the bounce into the 50 is that gets rejected. You can sell some call credit spreads. So I did a little day trade like that yesterday, but I think you pick your spots wisely. And I think if you're going to short here, you want to keep it, no pun intended, keep it short and sweet. Because as I'm shorting the SPX yesterday, I got to have the understanding that I'm short right above what could be just major support, which could lead to a nice bounce. So I don't think you want to short at -2 to -3 ATR, nor do I think you want to try to short this thing into big support. So pick the spots wisely, y'all. But in terms of a week from now, 2 weeks from now, this market is shaping up. VIX has died down. We held the weekly 21, and the daily charts are looking a little bit cleaner here. There are a few spots I want to put some cash to work. So one place is Home Depot. Take note of something like a Home Depot where the market is down 5% over the last week or whatever it may be here. Home Depot continues to hold structure. You got a daily squeeze here. The histogram continues to gain momentum. You've got a 4-hour squeeze. That's held structure. And then for your bigger time frames, there's a 3-day. And you got the big W. You got the weekly squeeze. So if you can get a market behind you in a name like a Home Depot that hasn't lost structure, hasn't broken down, just continues to develop a really good setup, once you get a bit of a market behind you, I think you're looking for those names to take off first. So we do have a spread here in the mastery, and our short strikes are sitting pretty down here at 325. So we're working some exit orders, but I would like a little bit more exposure. So for anybody listening in the mastery, the current game plan is let's see if we can get our 70-ish% of max profit on that current spread. Then we'll just parlay those profits into another one. But I think you keep an eye on Home Depot here. In lows, I would put into the same camp. Really good bullish structure in the face of a lot of volatility. And to kind of give, this is really impressive. When you take into consideration, and it's not just Home Depot, there's a few examples of this we'll cover, but specifically here with the Home Depot, you got all these forces, so to say, trying to pull this down. You've got the S&P 500, obviously, bringing everything lower, and then a bit more specific to Home Depot, that makes up a good chunk of the home builders here. They've been flushing. Home Depot's a pretty good chunk of the Dow there, and the Dow's not the prettiest thing. So I think the fact you've held up here really well in the face of the volatility and in the face of a lot of pressure and a few baskets that Home Depot plays a pretty good role in, I think you're looking to get long there if the market shapes up. The next spot here is Netflix, which looks just super bullish to me. So with our weekly chart here, I do think there's a potential. And keep in mind, if the market goes down another 5%, I really doubt Netflix is going to hold up. So it's a huge component right now. It's not, we're not quite at that point yet where the setups on the individual stocks are the most important thing. I think right now it's more so volatility and the overall market itself. But in terms of the old flicks here, Netflix and chill, got your weekly squeeze. It is weekly squeezing for over a year. And here you are officially firing to the upside. And it's not that we're just firing to the upside. You can pick your number here, 560, 570. Just in terms of that previous range, we're doing a pretty good job of holding support. So you do want to see resistance, or what was once resistance, turn into new support here. Then you can get the continuation. If Netflix is coming back towards 560, 550, it's liable to be a total chop fest again. So there's kind of your driving force, that weekly chart. And compared to the overall market, you're just holding nicely here at the daily buy zone. So you can see all that bullish momentum up there with the green 10x bars. And while we don't quite have the daily squeeze just yet, we could get it today. We could get it this week. I think you look for a bullish squeeze in a lower time frame. And you don't have that here on the 4 hour. You don't have that on the 2 hour. So needless to say, I don't think you have to rush into Netflix. The daily and the 4, 2, 1 hour, 30 minute kind of tells me you can be patient here. And then you got the Fed coming up. You get the market a little screwy here. But if everything kind of tightens itself up a bit, I'm looking for continuation back into a new high for Netflix. Probably looking to swing it into October earnings. So earnings is going to be October 19th. So what I'm thinking here is probably October 15th expiration. And basically just an at the money, maybe, strike or so out. That's pretty attractive. Risk $300 to make just about 200. Put credit spread at 570, 565. So I do like Netflix here. Ideally, you get a market behind you. Another one I like here is Tesla. Tesla, I think, holds up really well. So brand new daily squeeze. You still have a 4 hour squeeze here with a pretty good structure. In terms of, what could provide momentum here, not just in the next few weeks, but for months to come potentially, is that 3-day and that weekly squeeze. It's a pretty good combination. So I do think Netflix. I do think Tesla here is gearing up for a pretty solid move. What obviously could ruin that is the market going lower. But if things stabilize here, this is also one of the first spots I think you look to put some cash to work for a push into earnings. So I do have a bunch of positions here, which are pretty much at break even for October 15th. So I got 3 put spreads with short strikes at 735, at 725, at 700. Pretty much break even here. But I think market stabilizes. You look to structure something similar. How's the risk reward here? 725. So that's even pretty solid. Short strikes at 725. But ultimately, I think that 4 hour squeeze is going to be pretty key. Ultimately, this bad boy fires short. You're probably looking to pick up some Tesla closer to 700, 680. If that 4 hour squeeze fires long, personally, I think it's off towards 780. I think we start to get a solid push there. So keep Tesla on the radar. And in terms of tech stocks here, we'll look from a few different perspectives. If we're looking for a clean daily chart, you're not going to find that here in Apple. You're not going to find that here in Amazon. You're not going to find that here in Facebook. Where you will find pretty decent daily structure is Microsoft, which does a good job here of getting back together after that nasty flush. And even at the close there on Monday, it's just a daily squeezing. You're back in that range. So Microsoft holds structure decently here, as does Google. Google, I'd say Google's kind of skating on thin ice here. In terms of, can we compare it to a Microsoft? They're both pretty similar, though. So I think if you're looking for a daily structure to play in tech, it's got to be Microsoft or Google. If you're more so thinking, I really want to swing some tech here into October earnings, You could do Microsoft's daily. You could do Google's daily. You could also use Apple's weekly chart as your structure. I'll be looking to sell some put credit spreads under the weekly 21. Short puts down there at 140. While I don't like the daily structure of Facebook, I love getting long into weekly support. So for Facebook, for a potential trade into earnings here, again, based off that weekly chart with the mindset, we hold the weekly 21, 345 by 345, maybe 355, 350. That's pretty solid. So take your pick. But I think that weekly does give us a good perspective here, because if you're going to judge this market based on a 30-minute chart right now, it's ugliness everywhere. Judging the market based on a weekly chart, it's a pullback at this point that we've kind of desperately needed. And I don't want to say desperately needed. I think we should welcome it. So Facebook, Apple, the Qs, the S&P, they're still holding the structure on their weekly charts. In AMD, that's pulling back to weekly support. So in terms of this market shapes up and you're looking for exposure to the upside, I do suggest to keep an eye on some weekly time frames for the Apples, the Facebooks. Really just focus on a few of the stronger groups in the market: technology, communications, semiconductors, and do your due diligence. Find some clean daily charts. We'll take a look at a few here, but don't ignore that weekly. Could give you a really good structure for trades 30, 40 days out from expiration. But real quick here, then I'll jump into the chat. In terms of good-looking daily structure, there are a few things here that have kind of listed the test of volatility. So as we discussed, one is Tesla here. Brand new daily squeeze. You held your buy zone. Good-looking stuff there. No daily squeeze just yet, but I will continue to suggest to keep an eye on Netflix here, right at that daily 21 EMA. Home Depot also, as we covered, good structure there. I think Lowe's, I can spell correctly here. If you look at that chart and nothing else, you got no idea the market's rolling over a bit. They're the first things you want to get long. But a few more here. HCA Healthcare, really bullish here, and just hold structure so well. Chipotle, beautiful daily squeeze. Right? Just totally unfazed by the market's little nastiness here. You got a recent IPO in Monday. Daily squeeze at the buy zone, stacked DMAs, green 10x bars. You have got a 4-hour squeeze here. So that's kind of living in its own world. Another one here is HubSpot, HUBS. Good structure. McDonald's. I think the idea of selling some out-the-money put spreads on McDonald's for October monthly expiration might not be a bad idea here. Just it behaves this week. Behaves really well. Next one up here is Moderna. Hold structure this week, right at the buy zone. Whole bunch of bullish momentum. And if we dial it down here a bit, I think that 4-hour is going to give you your next push to the upside. Or let me reword that. If the trend is going to continue to the upside, that 4-hour squeeze has to fire long first. So I think you can use that for your potential entry there. But Moderna looks really good. Zscaler, really bullish. Really, really bullish. You got SE, daily squeezing, and Snapchat. Holds up good here as well. So there's actually no lack of good-looking setups, even on a daily chart, as the market's daily chart isn't the prettiest thing. And for the things that are seemingly a bit ugly on their daily time frame, the weekly chart, at least right now, is painting a different story. It's like Apple's breaking down, we're flushing, we're at -2, there's a squeeze firing short, red to next bars, no stacked DMAs. Nothing bullish about that. But we take it to a weekly, then that's really bullish if you hold here. So those are a few things I'm keeping an eye on. All I've got here is Home Depot for the mastery, and then a little bit of Tesla on my own. And the Netflix is the Teslas, the Home Depots of the world. Likely to be some of our next trades if things shape out here. But for today, essentially all about the Fed. Now, the Fed could be a total non-event, which actually wouldn't surprise me. It's just kind of some of the noise, so to say, leading into the event. So there's a few things for y'all to keep in mind. Daily charts versus weekly charts. Be cautious of shorting rather, in the hole at -2, -3, especially when that lines up directly with the weekly 21. Think if you're going to short here, you wait for a bounce like yesterday, you sell some call spreads, and then you take profits into the close on the flush. But that's what I got for you here, homies and homettes. Let me get caught up in the chat, see what we got going on. All right. What's up? What's up? What's up? D Professor 1. One notable difference in the weekly ES pullback to the 21 and the two previous pullbacks had SQ. You mean squeezes, D Professor? Okay, all right. I see squeezes there. Very good observation. Actually, that's a really important observation. Here's why. I think for the last year or so, it's not just that the market has breeded a buy the dip mentality. It's not just that. It's more so, if you don't buy that dip immediately, you miss the next leg to the upside. Up to this point, these flushes are so short-lived, but the reversal back to the upside is fast and furious. One thing you do need to take in potential here, because I think everybody is leaning on, one extreme or the other. You got the bulls here who are looking to buy this dip with the expectation that like the last 3 to 4 times we just rip back to the highs. On the other side of things, you got the bears who are looking for another 5-10% to the downside. That third alternative is you pull back to weekly support here, and we spend the entire month of October just chopping, going into a new squeeze. So take that into consideration. It's one thing to hold weekly support, but if you start buying out the money calls that expire next Friday, you need immediate continuation. Totally different mindset to say instead, let me see if we hold support here, and let me sell some out the money put spreads, just seeing if we can hold structure. I do think where traders can take a lot of damage here is the assumption that, we're going to rip right back towards the highs. And actually, at this point, that would surprise me. I think what's way more likely is we hold weekly support and we're looking at a few weeks of a chop fest. So if that is the outcome, short premium, put credit spreads, probably going to be one of your best bets there. But that was a great observation. That was a really good observation. Profit Reaper, can I take a look at CRM? Yeah, let's take a peek. I like it. I like it a lot. Now, keep in mind, the key right now is, because there's a lot of good-looking setups out there. I'd say you can call CRM one of them. But the realization we all have to have right now is that it's got nothing to do with CRM, and it's got everything to do with the market right now. Thinking in terms of probabilities, something like a Salesforce, a good uptrend, you got a daily squeeze at the 21 EMA. In terms of probabilities, if the market gets back to business to the upside, then there's a good probability something with a structure like a CRM can continue to go higher as well. I would argue there's an even greater probability that if instead the S&P 500 makes another leg to the downside, that CRM is going to go lower with it. So there's a lot of setups I like here, but remember, we want a market behind us. And this is actually going to lead me to, I think something key here. Look at that most recent bullish move on CRM. This is really important. If you're looking at this daily squeeze here, you're probably looking for a similar move to that one. Back here in mid to late August. The reality is that push in Salesforce had nothing to do with Salesforce. You had a daily squeeze, you had stacked DMAs, you have the same thing right now. That had basically nothing to do with Salesforce, and it had everything to do with the fact that at the exact same time, the S&P 500 was setting up in its own daily squeeze, giving you all that wind at your back. So visualize that price action from the S&P mid to end August, and then look at Salesforce, then look at Facebook, then look at Apple, then look at a Tesla, right? Look at an NOW. You can look at individual sectors like real estate, communications. Back in mid to late August, you had that structure here in the S&P 500, where the market itself is getting ready for its own potential push into 2 to 3 8AR. That's when you're going to have the best win rate. You're going to have your most profitable trading on something like a Salesforce. With that wind at its back, it's probably just going to continue its trend. Understand, and this is for all of you, we're not there right now. You got a similar structure to the one you had back here for Salesforce, but what you're missing is a market putting wind at your back. As a matter of fact, it's quite the opposite. Until this chart does a major cleanup, you are firing a daily squeeze to the downside. Now, Salesforce potentially could be one of the few stocks to buck the trend and rip higher here as the market potentially goes lower. But I do think we want to think in terms of probabilities. So, got a little carried away there, but just visualizing that chart, yeah, that's why you caught that nice move over here. It's the same reason Facebook pushed in Apple and Tesla. You had the market going with you. We don't quite have that just yet. And that's what's keeping me patient. Otherwise, I'm taking Netflix, I'm taking more Tesla, I'm taking more Home Depot, I'm taking some Microsoft, I'm taking some Google here. It's just the realization that when I trade these individual setups, I have my best success, and I think a lot of us have our best success with a market kind of supportive of that idea. Daily squeeze in the index fire into the downside, I wouldn't so much say is supportive of getting long tech stocks. So all the few things to take into consideration here. My pleasure. That's a great question. Rich, in terms of holding QQQ puts, I think your line in the sand here has to be the weekly chart. Right. Now, you got October expiration. That's what you said, right? Okay, October expiration. Rich, here's the way that I would look at it. Again, just going back to probabilities. So thinking in terms of probabilities and just call it respect for the overall trend. If we hold that weekly 21, then I think there's a good probability that you're holding those puts through the continuation of that trend. Just looking at the structure here to try to short it into the support level, you can bring home some profits. But to hold for a little bit more profit, as we're holding support there to 21, few weeks later, those profits can disappear. So I do think that's kind of got to be your line in the sand here. Where those puts could really start to pay handsomely is we start to close under the weekly 21. Because now you've got a shift of structure potentially on your major time frame here. So that's a major thing, Rich, to take into consideration. Going into the Fed, it's only Wednesday, potentially a little bit too early to really have a true sense of things here, but that's what I would be careful of. Is holding puts on the Q into key weekly support. If the trend continues, this is where we should hold. So keep that in mind. Ronnie, let's take a look at NUE. So Ronnie, I wouldn't do anything with this one. And the reason being is I only trade one setup. And I can't suggest enough for all of you. Try to get to that point. One setup, two, maybe three. There's thousands of stocks out there. So it's not that NUE isn't tradable. And I'm going to guess that for some trader out there, this could be their one setup. But that's a key. You got to have that one setup. So where I would trade NUE all day is right here. Daily squeeze. I would trade it all day long right there. Daily squeeze. Nothing to do with the stock, everything to do with the setup. So that's the only reason I wouldn't do anything here. It just doesn't fit my personal criteria. Jason, exactly. What I'm not trying to do here is, here comes plus 1,000 ticks. Let me start to buy everything, under the sun. I'm really thinking more into October right now. So if I'm going to use this flush to my advantage, what I'm not trying to do is use it to my advantage to load the boat on trades that expire next Friday. I mean, that's worked all year long. But again, we might not get the immediate continuation. We might not get it at all. So it's that third alternative. The market just goes into consolidation mode for a bit. That really, is what's keeping me patient here. So, ticks are important, but I'm thinking a bit bigger picture. The picture that I want to see come together is probably going to take, days, if not a week or so. That's why I'm leaning a little bit more into VIX here. Jason, if VIX is still up here at 23, 24, 25, I just got no interest in getting long, even if the ticks are over here, screwing. Great question. Great question. Hey, V, what's up, V? Let's take a look at what you got. Spot? I think you want to give it time here. Let me check a weekly chart. Yeah, I would give it time. It's just kind of in consolidation mode. Right? When you look at the histogram, we're looking for light blue. If you got light blue bars on the histogram, that's positive momentum. Now it's potentially getting ready to heat up. When the histogram is yellow, it's more so just kind of consolidation mode. Taking that same approach to the daily chart here. And here's a positive histogram, but as we go from light blue to dark blue, we're losing a little bit of momentum. So I think, especially with the market a little bit shaky right now, let this kind of play out. Where I would get interested is if we could spend the next 3, 5 or so sessions in the buy zone, right near that 21 EMA, and then I would look for the next daily squeeze. Because you made a nice leg to the upside. Here's your retracement with the market. Might go into chop mode, but if you get another daily squeeze in here, then you have a structure to work with. So that's what I would wait for. I'd wait for it to look similar to, say, a Home Depot. Histograms fresh, stacked DMAs, and now you got a structure here with a squeeze getting ready to take off. I'd wait for that for a bit. Dale, I like Zscaler here. I mean, just super, super clean. Super clean. You got a 4-hour squeeze. So where I would look to take my entry is when that histogram starts to go positive. So often that 4-hour squeeze is one of your better early entries for that bigger picture move off the daily chart. So if you look at the previous push to the upside, there's your guilty 4-hour squeeze. So as that histogram starts to go positive, this is kind of a goofy analogy, but you're looking for the big push off of that daily 21. You got that daily squeeze building up energy. So you're kind of looking for the volcano to erupt here. And a lot of times it's that mini volcano inside the volcano that's really going to get things going once it starts to erupt. So it's kind of like that domino effect. You're building up energy here on your 4-hour chart. If that starts to release energy, a lot of times that can trigger the daily squeeze. So if a 4-hour squeeze can run for 4 to 8 bars, and if that can trigger a daily squeeze, which can run for 4 to 8 daily bars, that's a nice combination. So I think Zscaler looks beautiful here. If the market goes down another 3, 4%, does it continue to hold up? That's the big question here. So, and believe me, I want to get long a lot of stuff. So I wouldn't even say I'm bullish right now. It's just more so the acceptance. I don't have the wind at my back. I had it back here in August, and it made for a lot of good trading. And as soon as the market starts coming in, everything starts to change. So that's the interesting dynamic here. If anything, you scale down in position size. You take a trade in something like a Zscaler. I think you give it plenty of time to expiration, just in case the market's a little bit shaky, and potentially you scale down here. Keep it a little bit smaller, just in case the market ultimately does yank it down. But it is a beauty. It is a beauty. Lucas, that's it, man. The squeeze. So I started learning the squeeze from John's videos and the books maybe, how old am I now? 28 almost, 29? Like 8 years ago, long time ago. So I started focusing on the squeeze and like I was having success with it. And for whatever reason, it's like I would continue to stray from the squeeze. So I'd trade the squeeze for 2 months, have great results, then stray from that setup, start giving back profits. So it took me a handful of years to kind of get to that point where it's like, all right, you know what, this is what I'm going to do. So I'm not just a trader, I'm a trader of, one specific moment in time. For me, just with my personality and mindset, one of the better decisions I could have made. To be very specific about what you want to become really good at, to me at least, makes the game a little bit easier. It doesn't have to be the squeeze, but I do certainly suggest you at least make it a part of your focus. If you're only going to focus on 2 or 3 setups, strongly suggest you have the squeeze in there somewhere. And over at Simpler Trading, that's kind of that's the one consistent between myself and the other moderators. So you got Allison, you got Sam, Danielle, Henry, John, you got a whole bunch of us, Raghi. We all have different approaches. We all have different time frames, mindsets. We all take advantage of different option strategies. One thing we all tend to have in common, though, is that the heartbeat of it all, so to say, is oftentimes a squeeze. So I do think there's a lot there. OV, so I'm not too much a day trader. Not anymore, at least. But to your point, if I was going to day trade, it would be nothing but squeezes. And I would be looking at 15, 30-minute, 60-minute, maybe 2-hour squeezes, especially if you're looking at stocks in an uptrend. So a Zscaler here, for example, that 30-minute squeeze, taking into consideration just the bigger picture here, right? Daily trend, daily squeeze, those can make for really nice day trades. My short yesterday on the market was kind of catching that 30-minute squeeze fire and short right there. So I think 15-minute, 30-minute, 60-minute, a few good spots to focus on. Yeah, Oswald, that's the key. That really is the key. And like I said, I think it's human nature to want to do the opposite, especially in something as emotional as trading. Like there's almost comfort in this endless quest for the perfect strategy or the perfect setup. At some point, you got to pick one or two and just commit to it. That's how I think, at least. Yeah, absolutely, Lucas. And keep in mind, we're all different. So, obviously watching John trade for so many years now, he's got that unique skill set. He's like a master craftsman, so to say, where he can just pop in, immediately get a feel for the market environment. Keep in mind, he's got like 30 years of experience under his belt, which many of us don't have yet. And he can kind of reach into his toolbox and it's like, okay, A plus B equals C. I'm going to do call credit spreads. Okay, next Tuesday, A plus B equals C. This is a perfect market for debit spreads. Kind of like a master craftsman. And I would imagine for his personality, that probably, is what's worked over time. For me, it's more so like, here's this one thing, and I'm just going to try to live and breathe this. And who knows, maybe when I have 30 plus years under my belt, you pick up things along the way. But I think there's a lot to be said for the power of focus. Definitely a lot to be said. Fly Guy, good question. That's not something I do anything with. For my brother Chandler, I do know he's a bit more into the flow side of things. All right, y'all, we got a few minutes here. I'm going to just try to get caught up in the chat, make sure I'm not missing anything. Today shall be interesting, though. So, at the very least, patience into the Fed is probably not going to be the worst idea here. And I would imagine that's 2:30 p.m. Eastern. Tends to be the case. All right. I think we are good to go here. So just to quickly rehash, keep an eye on the volatility index. Thinking in terms of probabilities, VIX back towards that 21. The market has just such a higher probability of curling back towards the upside. VIX just continues to linger here. Even worse, continues to pump higher. Down goes the market. It's kind of that simple. Um, Daily structure is what has me being patient as far as the indexes go. It's not the moment in time we had over here, but where I do think you could have some awesome swing opportunity into October is shifting some of your focus to the weekly trend. And I just want to use the cues here. Again, this is where you got to have patience. It can be really dangerous thinking to look at a trend and say, hey, you buy that dip, you made a lot of money. And if I bought that dip, I made a lot of money. And 1, 2, 3, 4, 5 occasions later, it can be easy to have that same assumption. We don't want to blindly get long into support. We want to wait till we have a little bit of structure behind it. But I do think taking a look at the weekly, at least for me, it's painting a slightly different picture. And it's kind of, it all makes a bit more sense, so to say. We're up here at +3 ATR. We're due for a pullback. And then a strong trend. That pullback is to the weekly 21. So I think the weekly charts can provide some awesome swing opportunity. I think you want to be a bit patient here. Ideally, VIX is coming on in. And then at the very least, slightly cleaner daily charts. Get some exhaustion here on that histogram. I'd love to see the red bars flip over to yellow. That's kind of your first sign here. So be patient, but I do think you got structure out there. The Home Depots, the Lowe's, the Chipotle's, the Teslas, the SEs, the Modernas, the ZSs of the world, we still have that combination. Netflix, right? They still got that combination of the big three: trend, structure, and bullish momentum. If they can get a market behind them, I think you got some solid opportunity there. And Maurice, before we hop off, we'll take a quick look here at Lyft. I'd wait for a dip. I'm just not a fan of getting long up here at +2 ATR. I tend to want to get long at the 21 EMA, the white moving average, and then I take profits into the purple and the red Keltner channels, which is 2 and 3 average true range moves above the 21. So that's just one of my firm rules. A lot of times that means I miss a lot of the move because it could easily continue to 55 plus here, but I would wait for a dip first. All right, y'all, market opens up in 2 minutes. I'm going to cut you loose, go heat up my coffee. For those of you in the mastery, I'll touch bases here a few minutes after the open. How's Home Depot set to open? No headaches here, but I appreciate y'all tuning in. I will see you again. Chandler has you Friday, so I will see you all on Monday morning. Trade safe, be patient. Appreciate your time as always. Talk to y'all soon.